Nina, you tell me if you can see me.
Make sure that you keep an eye on the chats. I will too.
I think it's on right now.
They're going to talk to me. Yeah, someone said hello from Sunny.
Can you see me?
No, I can't see you yet.
Stop streaming. How come it's not?
Oh, I have an advertisement coming on.
It's starting now. Hey, everybody. Welcome to the live stream. Let me know. Oh, people are saying hello, so I assume that you can hear me. I'm a little nervous, I have to be honest. This is my first ever live stream. I've done lots of I don't know, live events. I guess I've done live events before, but I never did a live stream, and I literally spent all day yesterday trying to figure out the technology. So hopefully all my tech is good. Hopefully you guys can see me good. I am, don't be you, it will be awesome. Thank you. I appreciate the love. So I have my chat up, and what I'm here to do, let me take a deep breath. What I'm here to do is show you how easy it can be to literally create yourself income on a weekly basis for the rest of your life. Listen, all this stuff is free, and my intention is I want to help people live the lifestyle that I've been living, not working for somebody, doing what I want to do, just creating income over and over and over again. Excuse me. So in the past on my YouTube channel, the videos that I do, I think they're great, but they're restricted in a sense that, it kind of shows you like this snapshot in time. If I sell a put on this particular contract, or I buy shares and sell a covered call, and I kind of walk through all the screens, but it only shows you that snapshot. So the purpose of this live stream is to be with you guys every Monday, every Wednesday, every Friday. I'm going to use a paper account. I think you guys can all see my paper account in the background here. So I started this paper account with 25,000. I'm using Schwab Thinkorswim, and they had a couple of different choices that you can start a paper account with. A paper account, if you don't already know, is kind of like fake money. It's hard for me to do my own account because I don't want to show you guys my account number, and I'm on the internet, obviously. So there's personal information there. So the point of this is to show you a real account, although it's paper money, but we're going to track it ongoing. So you guys are not only going to see okay, how do I put the trade on? How does that work? But you're also going to see how does that look after some time goes. Oh, that's okay. So my daughter's my helper here. So it does say an account number at the top, but that's like a fake account number. So thank you, Nina, for letting me know. So getting back to what I was saying, the purpose of this is that you guys not only see what is, how to put a trade on and how that looks, how you calculate it, is it good, is it not good, what's my rate of return? But what about Wednesday? What about Friday? What about if the stock goes up or if the stock goes down? What do you guys do? So the purpose of this is to show that to you, okay? I have my comments up, and Nina's helping me in the background, so I want you guys to feel free to put comments. Nina's going to kind of screen them for me because there's a lot of things coming through. I think all of you guys can see the other comments as well. And I'm going to spend some time perhaps throughout if Nina interrupts me with a good question. And certainly at the end, I'm going to go through some Q&A. I want you guys to learn. So I don't want to just it's like that whole teach a man to fish or give a man a fish, right? I don't want to just give a man a fish. I want to teach you how to fish. It's not that hard. Listen, 2 strategies that you need to know. How do I sell a put? How do I sell a covered call? How does that work? It's not that hard. It's very easy to understand the fundamentals, and then most of the finesse is kind of like managing that trade after you put that on. If you close it early, or what if your shares get assigned? What if you don't have any money? All those other things, what if? That's what I'm going to go through with you guys, right? So let's get started. So what I'm going to do is I kind of just put a few tickers in here, just some examples. I'm going to start by putting a trade on. So this is a 1-year chart. So let me just make sure I give everybody all the basic information. So whether you have absolutely no experience in trading options, I want you to come here and be comfortable and learn. And if you already have some experience, I promise I'm going to teach you things as well. This is a 1-year chart. Now, when we look at our trading platform, it can be super confusing. Listen, there's all kinds of stuff that we could add onto this page. And also, I do want to let you guys know, your page, even if you have Thinkorswim, it might look a little bit different than mine because you can actually change a lot of these settings. You can make candles instead of bars. You can add indicators. You can look at things a little bit differently. This is kind of how I have my screen set up. So it's kind of how I like to see it. So I always look at a 1-year chart first. Now, I don't necessarily care what the price of something is. The first thing that I'm concerned about is what is the ticker I want to trade. And the first one that I want to show you guys is IBIT, IBIT. So I have it highlighted here. Right now, it's trading at $60.17. This is a paper account, so it might not be moment-to-moment live data. It might be 10-minute delayed data. I'm not certain. But don't get stuck on the details. I'm just going to make it super easy so you guys understand the fundamentals, right? So what is IBIT? IBIT is Bitcoin. Listen, there's lots of stocks that you can trade. There's different stocks. There's different ETFs. I personally like Bitcoin because I'm a big believer long-term Bitcoin. It's not going to go bankrupt. It's only going to go up, and it has a lot of volatility. So when you trade options, when you're trading something with a lot of volatility, it gives you more premium. So the more volatile a ticker is, right, a stock that you're trading or an ETF that you're trading, it means it goes up a lot or it goes down a lot. Oh my gosh, I still have to get my jitters out. Sorry about that. I don't know why I'm nervous. Like, you guys aren't even paying me. I'm doing it all for free. But I guess I'm nervous because I just want to deliver like an exceptional, amazing program. And I want you guys to say, oh my gosh, I saw this chick on YouTube a couple months ago and she was talking about trading options, and then I started trading options and now I'm making like X dollars per week, or I quit my job, or I have money to, I don't know, take my kids on vacation or whatever. That's really what like motivates me, right? So going back to IBIT and volatility. When something has a lot of volatility, it means it goes up a lot and it goes down a lot. And that's what we want. Listen, this is not about buying stock, hoping and praying for that shit to go up, and then I'm going to sell it, and then I'm going to make some money. No, this is about putting cash in your pocket on a regular basis. So if you're a stock trader and you like that, this program is probably not for you. But if you want to create income for yourself, $50, $100, $1,000, whatever that number is, it kind of depends on how much you start with, right? So for example, you can't start with, let's say, $5,000 and make maybe $1,000 a week. That's probably not going to happen. But whatever that number is, I encourage you to look at it from, first of all, a percentage, a rate of return percentage. What's the percent that you're making on your money on a regular basis? And I encourage you to recognize that you can do that every single week, right? And so going back to IBIT and Bitcoin, first of all, it's a very inexpensive ticker. It's $60 a share. What does that mean? That means if I sold a put, let's say a $60 put, I have to have $6,000 in my account to back up my trade. Why? Because if it's $60 and I'm committing to buy 100 shares, 60 times 100 is 6,000. You could also use margin. Listen, we're going to talk all about that kind of stuff as well. Margin is kind of like using some of your money and then using some of the bank money. I'm a big believer, why use my money all the time when I can use somebody else's? I think there's value to that. Now that comes with a little bit more of management, right? Because you don't, sometimes if the stock drops down, you might have heard of like a margin call before. You don't want to blow up your account. You don't want to lose all your money. So there are some extra steps and things that you have to take care of in order to manage that effectively. But we're going to talk about that in this session as well. But the price is a good price. IBIT is just based on Bitcoin, spot Bitcoin. So actual Bitcoin is in this. Bitcoin goes up, this particular ticker goes up, Bitcoin goes down, this ticker goes down. So let's start with looking at puts. Now, when I go to the trade tab, so this is my Thinkorswim platform. So this was the charts tab, right? There's two things that I look at here. I look at a 1 year, and then I also look also at 1 day, 1 minute, right? So this is kind of like, you'll see like a gray shaded area over here, and you'll see this black area here. So this black area is today during the market. So this is all kind of like, where has the stock been trading since the market opened this morning at 9:30. This gray part is kind of like, where was it trading when America was sleeping last night and other countries were trading? So when the U.S. Market closes, other countries are trading. Not options, though. Options only trade Monday to Friday when the market's open, 9:30 Eastern to 4 o'clock Eastern time. So stocks trade overnight, but not options, right? So I'm going to go to my trade tab. So this is kind of what we call an options chain, right? So this is where we see all the options pricing. So down the left side, we see the dates, right? So November 14th, that's this Friday. So that's when this particular contract would expire. If I click on the box, it kind of opens it up, and it gives me a whole bunch of stuff, right? We're going to talk about that in a minute, but I just want to illustrate beforehand sort of what this looks like. Now you choose, when you trade options, the great part about, first of all, there's so many great parts about trading options, right? You get paid right away. You don't have to wait until something goes up. You also can make money if it goes up, down, or sideways. You can do it from anywhere. You don't have any customers. You don't have any employees. So there's so many amazing things about trading options. But one of the great parts, in addition to that, about trading options is that you are in the driver's seat for everything. You choose the ticker that you want to trade. Do you want to trade IBIT? Do you want to trade Apple, Microsoft, Meta, NVIDIA, General Electric, AT&T? There is an endless opportunity for trading. So you have to think about, what do you like? What do you resonate with? How much is the stock, right? How much are you starting with in your account? How much is the share price of that particular stock? Because you want to make sure, like for example, you can't have, let's say, a $5,000 account and trade Tesla because it's too expensive. It's like $400 a share, and you only have $5,000 in your account. So you want to kind of weigh that. And you want to trade something that you believe in long term, right? So I would encourage you, especially when you're new, you don't want to, or you want to try to shy away from like sort of trendy type of things, or meme type stocks like GameStop, stuff like that, that like people just jump in and kind of move the price up and down. You want to think of like, what's a good quality company? And if I had to own those shares for a long period of time, I'd be okay with that. And if the price went down on that particular stock, it's a good company, I would look to buy more shares. So that's the mentality you want to go into it with, right? So going back to you being in the driver's seat, you choose the stock that you're trading. You also choose the time frame for the contract. So going back to this page here, me personally, I choose 1 week contracts, and I do that. I say this in a lot of videos on YouTube. I do that for 2 main reasons, right? Number one, I don't want to tie up my capital for a long period of time, right? And I don't know what the market's going to do. Listen, I don't have a crystal ball. I'm not here saying, hey, I think this is an amazing opportunity and you should buy X. First of all, it's always your money. You make your own decisions, right? I'm just helping guide you and showing you what I'm doing and what has been working for me for a number of years, lots of years. But ultimately, you're going to make your own decisions. But I don't know where the stock's going to go up next week. Maybe it goes up, maybe it goes down. I want to make money no matter what. I want to make money every single week. Why? Because I want to pay for things. Like I don't have a regular job. I want to pay for the stuff that I pay for on a regular basis. But if you wanted to, you can choose different dates, right? So you'll see November 14th, November 21. Now the popular stuff, the stuff that's traded a lot, like IBIT, is a very popular ETF that's Bitcoin based. And so it's popular, so it's traded every Friday. Sometimes you might have a lesser known stock and you might not see contracts every week. I would encourage you to stay away from those because they're not as popular. There's not as much flow that goes in and out. And ultimately, it's just, in my view, not as good of a thing to trade. So you're going to choose the choose the date rather. So I'm going to choose November 14th, and I'm only going to look at this Friday for now. Now, strike prices are going to be down the middle. What's a strike price, Michelle? When you're selling a put, now in these sessions, we're going to talk all about options. And I'm going to talk about selling puts and covered calls, but I'm going to start with selling puts. It's like the easiest thing. It's probably the best place for a new person to start. And basically what the strike price is That's the price that you are committing to buy those shares, but only if it drops below that price, right? So let's go back to IBIT. We see the price right now of IBIT, $60.27, right? Right here. So we can, and by the way, I can also not look at so many things on my screen. Like I can choose to show 14 strikes. It just makes the page less clogged up, right? So that might be easier on the eyes, right? So let's look at it this way. Now, I only look at a couple things on this page. You can put a bunch of information in here, but I'm a big believer, like I said this to a guy named Anthony this morning, who I'm working with. Shout out to you, Anthony, if you're watching. You can only fit so much stuff in your head, right? I don't know, this is how I roll. Like, I don't want a bunch of nonsense in my head that's not relevant. And options trading, stock trading, it can be uber confusing if you let it be uber confusing. I mean, listen, you can talk about like, you know, sometimes people comment on my YouTube, you know, theta or spreads or, you know, iron condors, butterflies, all these crazy things. You don't need all that. Listen, just make it easy for yourself. I think sometimes we as humans tend to make things more difficult because we like a challenge maybe, or you know, maybe we don't realize we like a challenge, but we want to be challenged and we want to solve a problem. That makes us feel good, that helps our ego, right, sometimes. So I would encourage you to think about that and don't make it too hard. Listen, just keep it simple. Think of one ticker, right? One ticker. Let's start with one place, and we're going to start with selling a put, right? So strikes are down the middle. Now, this is the price at which you are committing to buy your shares if the stock drops below that price. Now, a couple things I look at. I look at delta. Delta is the statistical likelihood that the stock is going to go below that price before the contract expires. Is it black and white? No. But it gives us kind of a good idea. Like, it's like, okay, how likely is that to happen? And you'll notice a couple things right off the bat, right? You'll notice the lower we go on the strike price, the less money we get paid, right? So let me show you kind of where you look at that information here. We're not going to look at the bid or ask right now. We're going to look at this last price. This is the last price that the contract traded. So, for example, if we're looking at a $57 put that expires on November 14th, it last traded at $21, right? The delta's 13, meaning that it has a 13% likelihood it's going to go below $47. Now, it doesn't mean it can't go that way, right? It could go to $50, right? It just gives us kind of like an idea, right? If we look at, let's say, a $59 put, well, hey, that last traded at $57. Why? Because it's more likely that it's going to go to 59. Think about it, guys. A lot of this stuff, it's kind of hard at the beginning because you're not used to it. But once you get the hang of it, it is literally, I promise you, it is literally like anything else. Here's an analogy that I use a lot. So obviously, I'm not a teenager anymore. But when I was young, I learned how to drive stick shift. I think I was like I think I might have been 22 or something at the time, right? Anybody drive stick shift out there, right? And when I was learning, I got my license when I was 16, but when I was like 22, I think it was, stick shift, I was like, okay, well, let me figure this out. I got to put my left foot, the clutch, right? And then my right hand shifts the gears, right? First gear, second gear, third gear, reverse. I got to move it all the way this way. If I'm on a hill, I might start rolling back, so I might have to like do a little bit of finesse with both my feet. It was hard. And at the beginning, I was like, how can I do that? Like it's just like, oh my gosh, it was overwhelming. But what happens? You practice it, you do it a few times, and then it's like second nature. I haven't driven stick in a while, but I'll bet if I hopped in a car, maybe I'd grind the gears a little bit because it's been a while. But it's not that hard. And this is the same thing. So when you think about it logically, is if the price is at $60 a share right now, is it more likely to go to 59 or is it more likely to go to 57? It's more likely to go to 59, right? So you're going to be paid more money for it, right? But here's the key, guys. You choose. What is the price that you would feel comfortable buying those shares if the price went down, right? And so what we're going to do is we're going to walk through a couple of different scenarios. I have a calculator up, so we're going to look at that. I'm going to drink some I often drink out of a wine glass, but this is coconut water, so it's not wine. Not that it matters either way. But let's walk through a couple of examples, right? So I'm just going to start with a 58.50 put. So what does that mean? That means that if IBIT drops from where it is now, $60.29, you guys see it? And you guys let me know in the chat. Nina, you monitor the chat and you let me know if there's an important one right now, because I want you guys to understand. So that means that if the price of IBIT drops below 58.50 before Friday, I'm going to commit to buy 100 shares, right? How much do I get paid for that? So the whole key to options is I'm creating income for myself. So this last traded at $43, right? It says 0.43 in this last column. So when it says 0.43, we're always going to multiply times 100, right? Because when we're trading one particular options contract, we're committing to buy 100 shares. So that's just the way it works, right? So I can do it on a calculator. 0.43 times 100, it's going to be 43 bucks, right? So that means $43 gets dropped into my account right then and there. How much do you need to make this trade? Well, you're committing to buy 100 shares at 58.50 if the price drops below 58.50. So 58.50 times 100, you need $5,850 to make this trade. So always before we put a trade on, we're always going to calculate the rate of return because we want to know if it's a good trade or not. And that helps us decide that factor, right? So we're going to divide the premium that we get, 43 bucks, right? 43 divided by 58.50 because that's how much we have to put up if we have to buy the shares. Okay. That's 0.007, but that's for 1 week, right? Because this is a November 14th contract. If I multiply by 52, because there's 52 weeks in a year, we're going to annualize that out. That means I'm making 38% on my money. That's not bad. I mean, it's certainly better than like some 4%, money market, 3%, 5% money market account you have. It's better than 8%, 10% that these financial advisors, oh my gosh, I got you 10% per year. How amazing am I? Okay, this is almost 4 times as much, so it's better. We could do better, but this is a learning experience. I'm just showing you kind of how we walk through this, right? Now, let's say if we go a little closer to the money. Let's say we do $59.50. Okay, the price right now is at $60.26, and $59.50 has a 38 delta, so it's still more likely that it's going to stay above that price, but it's a little bit closer, right? So it's a little bit more likely that we might have to buy those shares. And for that higher likeliness, we're going to make more money. So this one last traded at 75 bucks, right? So I'm going to divide $75 our premium divided by 59.50. That's how much money we have to put up to make the trade. Well, now we're making 1.2% for 1 week, right? So our rate of return is a lot higher, right? Do you guys see the correlation with that? So now we're making like 65% on our money, right? Now, the implied volatility is something I look at as well. The implied volatility on this particular ticker is 40, 45, 44%. Typically, I would have expected, I just kind of pulled this up now. If you trade other crypto things, you're going to have typically a little bit higher implied volatility. It's still not that low, but it's not super high. So this is a good one to start with, a very good learning experience, right? So you get to choose which strike price. Now, sometimes people will say, well, how do I choose, Michelle? Like, how does that all work? Like, I'm so confused. Okay, I got to pick the stock, and I pick a stock that I like. Okay, I got that IBIT. And then I pick the date. That's an easy one. So picking the date is easy. Just do 1 week, right? But for a strike price, like, how do I pick that? I want to say this to you guys. There is no right and no wrong. Listen, this is all about, like, let me just swing for a single. And I don't know, hit a single as if I'm playing baseball. Sometimes I let the pitches go by and I walk the base and I just want to win the game. Life is a marathon, it's not a sprint. Trading is a marathon, it's not a sprint. There's no right or wrong. You're going to find your groove. So for me, because this is, let's say I'm starting a brand new account and I got 25 grand in there, right? What am I going to do? I'm probably going to pick something a little bit closer to where it's trading. You know why? Because I like Bitcoin. I'm okay. If I have to buy 100 shares of this, I'm okay doing that because I'm going to sell a covered call against it. So I'm going to pick something a little bit closer. Maybe I'll pick something a little closer to the money. I'm going to pick a 59.50, right? So I'm going to just put this trade in right now, and then we're going to talk a little bit more. I'm going to go through some Q&A with you. So when I put the trade in, here's how I'm going to do it. I'm going to click on the bid. So let me talk a little bit right now about the bid and the ask. And as we kind of go through these sessions, I'll go through more of these explanations. I don't want to flood you with too much stuff right now. I want you to like understand the basic fundamental information to say, oh my gosh, Michelle, this is not that hard. I could totally see myself doing this. And by the way, once you learn the fundamentals, I think this is super important for you guys to know. Once you understand the fundamentals of how do I sell a put, what does that mean, how does that look like, how do I sell a covered call, how do I manage that throughout time? Once you understand that, you will literally take like maybe 15, 20 minutes a day. It's funny because this is interesting. Once in a while I work with some one-on-one people. I started doing that not long ago. And sometimes, during our session, like if it's an hour, sometimes, 55 minutes, whatever, sometimes I'm like, there's not a lot of, it doesn't take a lot of time. Like once you get in the groove, you will not spend a lot of time putting trades in. You know what you're going to spend a lot of time doing? Hanging out with people that are important to you, doing something that you want to do. Go to the beach. I don't know, go hang out at the park. I don't know, go on vacation, that kind of thing, or have a hobby. You're not going to spend a lot of time trading, so I promise you. But what I'm going to do is I'm going to click on the bid. So if you're selling a put, the bid will always be the lower price. You don't have to remember like bid and ask. What does that mean? People are buying at the bid typically. People are selling at the ask, but you don't necessarily have to know that. Just click on the lower number. 74 is this column here. 77 is this column here, right? I'm going to click on this, and it brings up an order entry box. And this is where you place your order. And by the way, different broker-dealers are different. This is Schwab Thinkorswim. Some people put their orders in on the Schwab online page. I would encourage you not to do that. I would encourage you to use Thinkorswim to put your orders, to look at the charts, to look at the prices, like how much is the contract selling for. And then you'll use the Schwab page to look at your positions. So you're going to use one thing for one thing and something else for something else. So when you put an order in, use this page here, okay? So this pulls up our order entry system. I'm selling one November 14th, 59.50 put, and I can change the price here. So here's how this works. I can choose a market price, right? Market price means like, okay, where's it trading? It's like I put it in, and then wherever the market is, that's where it would get filled, right? Personally, I never use market orders on options. I use market orders on stock. So if I want to buy stock or sell stock, I usually do that at the market. We're going to talk about that in another session, I'm sure. But when I put an order in for an option contract, I always put what's called a limit order. That means it's going to be this price or better. So $74 or more, right? And when it's 74 bid, that means that there's already people lined up ready to take the other side of that transaction. So if I click confirm and send right now, it's going to automatically fill. In fact, I'm going to do that, and I'm going to show you how that works. I'm going to click confirm and send. This just kind of pulls up like, okay, this is what you're doing. Are you sure you want to do it, right? And then I'm going to click send. And then bam. So you guys might have seen this in the upper left here, this red stuff. That's your order fill. So I sold one 59.50 IBIT November 14th put, and I got paid 74 bucks. 74 bucks got dropped in my account, right? I keep that. This is important for you guys to know, right? When you sell an options contract, you keep the premium no matter what happens. Now, one of a couple things is going to happen by Friday for sure. IBIT is going to be higher or lower than the strike price that I used, 59.50, right? If it's higher, I don't have to buy the shares. If it's lower, I'm probably going to buy the shares. The advantage of this live stream is we're going to walk through that together as we go. So I don't want to spend a lot of time and tell you a lot of stuff that you might forget or it's overwhelming. I want you to embrace and open your eyes and say, oh my gosh, this is actually kind of cool. And I could totally see myself doing that. And then you and I, me and all of you, we're going to walk through this together as time goes on. I'm also going to have these in my YouTube. So just a little bit of housekeeping. I'm probably going to edit some of these videos out and just take out like the maybe some dead air or whatever, maybe a couple pieces. But what I'm going to do is I'm going to put these on my YouTube so you can reference those. So if you miss a session, don't worry, is my point. Now I'm going to see, if I go to the monitor tab right here, I'm going to see this is my order that I did, right? So this shows me that I sold one, IBIT, November 14th, 59.50 put, and that's what I got paid for, right? And then as we move forward, we're going to kind of walk through all of that together. Oh my gosh, 329. What do we have for questions so far? I want to take a moment and kind of, oh my gosh, there's so many comments. Thank you for all the emojis too. I love the love. I really appreciate that. Listen, we all have ego, right? And I am like no other. And it makes me feel so amazing to be, I don't know, like influential and inspirational and helpful in changing the lives of people. I don't know, that sounds kind of corny. I don't mean it in a corny way. When you start trading options, like you can just create yourself a life like no other. Nina, what do we have for some good questions?
So one of the first questions we had was from Donna. Since prices shot up today because of the government shutdown news, are puts riskier as prices may come back down?
That's a good question. Donna, thank you for being here, first of all. So what can you read that again? Are puts?
Since prices shot up today because of the government shutdown news, are puts riskier as prices may come back down?
So here's how I would answer that. That's a good question. So can everybody see the questions, or is it just okay?
I think everyone
Yeah. So since the government shut down news today and prices went up a bit, does that make puts more risky, right? Or maybe less risky? How does that look? So I have to say this, and I mean this. I do not watch the news. And I know some people find that goofy and strange and different, right? Because especially trading, you'd think like, I don't know, do you pay attention to what's going on in the government? Do you pay attention to interest rates? I'm not a news person. Number one, the price of stocks is reflecting everything that's already out there, right? Number one. Number two, mostly what I'm doing is I don't really care what the price is that much. I care about what the ticker is. Do I like IBIT? And what I look at is IBIT long term? Is that a good stock? Would I be okay holding that stock for the next year? Yeah. And guess what? If that stock went down, I would buy more shares. Listen, if I like it at $60, IBIT as an example, and Bitcoin starts to crash or crashes, goes down significantly, I like it more at $50. I like it even more at $40. Everybody makes money when the stock's going up, but when the stock goes down and you're doing the right things and you got cash on the side to buy more shares when it goes down, that's when really like it separates the super successful people from the people who end up blowing up their accounts, or they trade a little while, their stuff goes down, then they panic and they sell their stuff at a loss. That's what differentiates all of these different players. So going back to your question, Donna, does it make puts more risky? I don't look at puts as ever risky. The way I look at a put is this. I'm taking in income, and worst case scenario, if that stock goes down, I'm going to buy a stock I like on sale. Like, cool. Like, okay, I didn't want to pay retail price for it anyway. And if it goes down further, I'm going to buy more. So I wouldn't pay attention to that. Government shutdown, not government shutdown, it doesn't matter. I mean, maybe you want to like pay a little bit of attention, but I generally don't watch the news at all. Good question. What other questions do we have, Nina?
Dallas Ray Texas said, how many options do you have on at any one time? And then Mark said,
Well, let's do one at a time.
he said 3.
Oh, okay. Yeah, good point. So thank you for being here. And I don't even know if I said this at the beginning. I am so appreciative. I don't know how many people we have on here. Can you see how? 154? That's fucking dope. I love it. I gotta not say the F word though, because I think there's like a thing with YouTube, and I don't want to offend anybody as well out there. But I want to say I appreciate all of you guys. Like first of all, pat yourself on the back. Like, do you know how many people I talk to that like, oh my gosh, Michelle, teach me how to trade or blah, blah, blah. And I talk about this too, that don't take action. You guys are action takers. You guys rock. You guys are here because you want to change your life. I commend that. I applaud you for that. So how many things do I trade? I encourage you to start with one. Start with one ticker and one contract. Listen, don't be a cowboy. First of all, generally I only trade like 3-4 tickers at a time. And number one, the reason I do that is because I don't want to have a lot of stuff in my head. One thing that you want to pay attention to as time goes on is earnings. Like all public companies declare earnings on a quarterly basis, but they all have like a different schedule. So like Apple might be, I don't know, November 15th, and Google might be December 1st or whatever. A couple days before earnings, you might have a little bit more volatility. So it might be a little bit more, have more up or more down, more swing, right? So that's something you want to watch. You don't want to have a whole list of things that you're paying attention to. You just need a few. That's it. And you need cash on the side. And the reason why you want to only just start with one or no more than just a handful is if those tickers go down, some of them, you want to have cash to sell another put as it goes down. Because what happens is, like, let me give you an example. I sold this IBIT put, this one here. Let's see, what was that contract again? It was $59.50. If IBIT goes down to $55, I want to sell another put for a couple reasons. Number one, covered calls, we're going to talk about them another day, not today. But know that if and when you buy your shares, you're going to sell a covered call against those shares and take in more money. But if the price starts to come down, you won't get that much money for a covered call. And the purpose is to create income for yourself every week. So when it comes down, you want to sell another covered call, take in income, and if you have to buy the shares, you're averaging your cost down. We're going to walk through all of that. I don't want to lose anybody on here. I want you guys to tell me if I'm talking. Sometimes people say, Nina tells me I talk too fast. Yeah, sometimes. I want you guys to give me good feedback. I'm going to try to not talk so fast because I don't want to lose anybody. I want you guys to be super excited. What was the next question, Nina?
Can you talk about trading with a prop firm? How do you do so and fast?
I don't know anything about prop firms. Sorry, that's no idea. Let's go to the next one.
What do you think about RKLB?
I don't know. Let's look through that. RKLB. I don't even know what that is, but let's take a look. So first thing I would do would be to open a window, RKLB stock, right? Rocket Lab. Oh, I think I did a video on this recently, didn't I? Yeah, I think this was good. I never traded it, but I think somebody else asked me about it before, and I looked at it, and I think it actually looked pretty amazing. Now that said, I want to be super clear. I'm not a I probably should have said at the beginning. I'm not a financial advisor. I'm not giving you specific recommendations. What I'm doing is sharing information, education, showing you how options work, how you look at trading, how you kind of like make decisions. But ultimately, it's your money. You got to make your own choices. But let's walk through this one. That's a good example. So first, I'm going to look at a chart, right? So first, I'm going to start with a one-year chart. Okay, so this is kind of like where has the stock been for a year? So you'll see goes up, goes down, goes up. Now, anytime you look at a ticker, you are going to see stocks go up and stocks go down. I have no idea why people freak out as much as they do when their stocks go down, because you need to expect that. So let's get that clear right off the bat. You want to expect that. And you want to be prepared for that. You want to have cash on the side if it goes down more. So Rocket Labs, if we look at the options chain, so here's our options chain. We go to the trade tab, right? Here's our strikes down the middle. Right now, Rocket Labs is trading at 51.71 per share. If I was to look at this implied volatility, uber high, uber high, 150%. That means you have a lot of swing. Now let's go back to the chart. Let's notice this visually. It's sideways here, right? So from here all the way here, sideways, kind of like this way. Here, it goes from $46 to $70-something in just a handful of days, and then it drops back down again. So you want to embrace volatility. Volatility, number one, you get paid more. Number two, you know, okay, it goes up a lot sometimes, and it goes down a lot sometimes. So if I have to buy those shares, dude, I'm okay with that. It's going to go back up. And if I have to, I can buy more shares and average my cost down. Let's see how much money we can make on a trade like this. Let's take a look. So let's open up more strikes. So we'll see this is kind of like all strikes, right? And let's go kind of far from where it's trading at now. So let's look at a $43 contract. So right now it's 51 bucks. If it dropped all the way below 43, I'm going to buy 100 shares. What's the delta on that? 10. So it's only 10% likely. Very, very unlikely, right? It last traded at $42, right? So I'm making 42 bucks 42, and I'm putting up 4,300 because I was looking at this one, a 43 strike, $4,300. I'm making almost 1% on my money for 1 week. If I annualize that out, I'm literally making 50% on my money. So let me summarize that. This is why everybody should be trading. This is a perfect, who asked this question, Nina?
This was asked by Nikki.
Nikki, props to you, because this is a perfect example. When you understand how to trade options, if you know how to trade options, you would always be like, oh my gosh, I should have started doing this a long time ago. Nobody ever learns properly and understands options trading and then thinks, oh my gosh, that's a sucky idea. No, like once you understand, and here's why. This is a perfect example. Here's what this means. Rocket Labs right now is $51 a share, $51.71 to be precise. I'm going to take in 42 bucks. I'm going to put that in my pocket right now, right? Immediately. For that money that I'm getting paid, I'm committing, if Rocket Labs drops below $43, I'm going to buy 100 shares at $43, right? If it doesn't drop, I don't buy the shares. Either way, I keep the 42 bucks. Dude, worst case scenario, I buy a stock that I like cheap on sale. Now, let me show you a couple other things. Now, to make this trade, if you put up all the money, you have to put up $4,300. I just want to show you margin for a minute. So if I click on the bid, I don't know why just hold that thought for a moment. I'm just going to blow my nose briefly, and I'm going to edit that out, obviously. Sorry about that. I think I have some allergies. My kids came here with the dog, and I got a dog, and my windows are closed. Maybe I'm catching a cold too. So let's go through. So as an example, I'm going to pull up the trade, and I'm going to analyze it. So I'm selling one November 14th, RKLB. This just shows the defaulted price, but I'm going to right-click on here, and I'm going to see Analyze Trade. This shows you how much money do you have to put up to make the trade if you use margin. Now, I want to tell you a couple things. Look at this stuff at the top, this chart. Just ignore that. This program, our trading platform gives us a lot of things that we don't necessarily need to walk through. It can be as hard as you make it or as easy as you make it. So ignore that. What I want you guys to see is this right here. This is the margin required on this trade. You need to have $473 to make this particular trade. So what was it that we were looking at? We were looking at this $42 strike price, or was it 43? I think it was 43. So if I calculate my rate of return, it was 42 bucks divided by $473 or $472, that's our margin requirement. If we're using some of our money and some of the bank's money, what's our rate of return? Dude, it's almost 9% for the week. Now, I do want to say you want to be careful. So I want to set a proper expectation. You don't want to open an account with $500 and make this trade, because what happens is if Rocket Labs goes down, that's going to change like the margin required, and that could what we call blow up your account, create a margin call, something like that. But let's say if you have $5,000 or something like that, you don't necessarily have to put up all your money to make this trade. You can use margin and do that very comfortably. And if you did like a trade like this every week, you're literally making like 460% of your money. I think it's I don't trade Rocket Labs myself, but from a mathematical perspective, I did look up this stock a while back when somebody else asked me, so I have a YouTube video on it. It was actually a pretty good deal. That's a good question. What else do we have for questions, Nina?
Someone said, what is the reason for looking at the one-day chart versus the one-year chart? And then someone answered, eBay answered, you then have familiarity with the stock price for the whole year.
Yeah, so that, first of all, I appreciate you guys answering each other's questions. I like that. It's like a community. I love it. Yeah, kudos. I appreciate that. So that is correct. She was correct in answering that. I want to look and see, and again, I don't really make decisions based on where the price has been, because I really focus on what's the ticker I want to trade, what's the stock that I'm comfortable with. But I want to kind of get an idea of where it's been all year, and then I want to get an idea of like where has it been over the last day. This is, oh my gosh, it opened here and it dropped like a rock. Now, when things are dropping like this, you see this price drop, that is the best time to sell a put, because when stock price is going down, the premium is going up. So you're getting more for the risk that you're taking. So that's a great opportunity. That's a good question. What else, Nina?
Austin said,
Yeah, so I'm so grateful that they're answering each other.
Yeah.
So that's a really good question, and that's a good point, and I thank you for bringing that to my attention. I want you guys to know this: when you have a position on, like right now, I have this contract that I sold. I can buy that back anytime I want. Now let's go back to the position I did this morning, right, or just a half an hour ago. I sold it for $74, right? So if we go to our oh, that's Rocket Lab still. Let's go back to IBIT. And here's my position here. You'll see it marked as a position. And here's where it last traded. I can buy this back. Like right now, the market, this position is trading at $71. What that means is this. I sold it for 74 bucks. I can buy it back for $71 and then lock in that $3 gain, and then the risk is off the table. So that might sound a little confusing, but here's the takeaway. Anytime you have a position on, you can buy that back at any point, but you might have to pay more or less than what you originally got, depending on where that stock goes, right? Now, I want to expand on that a little bit. What I want to say is this. Let's say IBIT goes down to, like, I don't know, let's say $58. So I have the $59.50 put, right? So that means that anytime it goes below $59.50, I'm committing to buy 100 shares. Oftentimes, it might go lower if that person on the other side of the transaction does not assign that contract. That means I don't have to buy it. So I have to be ready to buy it, but usually contracts only get assigned when they expire. In this case, November 14th, when the market closes. And the important takeaway for that, guys, and tell me in the chat if this isn't clear or if you have questions. Nina, you let me know if anybody posts something. But what I want you guys to understand is this. Oftentimes, the price can go down, and maybe it trades at like $59, $58, $57. Nobody assigns it on the other side, and then it goes back up, meaning that I don't even have to buy it. So I have time on my side. So that stock can go like this. But if it closes under $59.50, which is my strike price, when it expires on November 14th, I'm probably going to have to buy those 100 shares. Does that make sense? Any clarifications in the chat?
Now Austin says, can you talk the role IV or role here? I'm gonna pin this one.
In your decision, can you talk the role IV plays in your decision? Like some stocks are very high IV and some very low. What happened to the pin?
It's pinned. Can you talk the role IV plays in your decision? Like some stocks are very high IV, some are very
Yeah.
low IV. Mart said, he said high IV, more risk, more return.
Yeah, so here's how you want to look at that. So let's kind of compare a couple things. So if we look at IBIT as an example, that had the implied volatility of $43, right? That's how much swing it has, right? So think of like, let's say I was looking at Amazon with somebody else earlier, and I think the swing was like 30. So let's look at Amazon as an example. We're going to compare them. Amazon right now is at 248. And if I look at the implied volatility, it's like 32%, right? So the lower the implied volatility, our premium is not that much for the risk that we're taking. Now, it is true, whoever had answered that comment, it is true, the higher IV, some people say the higher the risk. I would actually encourage you to like reword that a little bit. It's higher risk in the sense that it's got more swing up, more swing down, but it gives you more premium and it gives you more opportunity. If you had to buy the shares, if it dips down, it's probably going to pop back up. So again, if we look at Rocket Labs that we were looking at, the implied volatility is 150%. The reason why your annualized premium, particularly if you're using margin, is like 400% per year is because the implied volatility is 150%. But let's look at the chart. Let's go back to a one-year chart. Okay, it went, let's look at this, for example. It went from 31 bucks all the way down to $16. It cut in half from here, January, to here, February. So a short time, it went down significantly. See this dip? And then what did it do? It stayed sideways, and then it kind of ran up. Then it went down. Then it kind of stayed sideways, and it ran up. Now it dropped down again. I would encourage you, don't be afraid of volatility. I like volatile stuff. I like Tesla. I like MicroStrategy. I like IBIT. I like Ether. What else do I like? I like Coinbase. I like volatile stocks because it gives me more premium. Good question. I think I can see some of these.
I'm
Yeah.
I'm just going to start pinning
Yeah,
these.
yeah.
So now this one says, it's also from Austin.
There's no way good. Wait, say that again.
He wants to know if you can talk more about
Strike
the strike price.
Yeah. So the strike price, I would say, here's the thing about trading. I mean, here's the thing about trading in life in general. This is not about perfection. This is not about like what's the most optimal thing, what's the perfect thing, what's the right way, what's the wrong way. This is about like, okay, let me think of a good stock that I like and let me see if it makes sense. Now, relative to strike prices, like let's go back to my IBIT as an example. If I'm really cool with buying IBIT, like, hey, I like Bitcoin, and I want to make as much money as possible, I'm going to go closer to the money, which is what I did. Well, I think I did a 59.50. I could go a little closer and make more money. If I really don't want to, let's say I'm new, like here's a good example. I have this up here, Big Bear. I was looking at this for somebody else recently. It's an AI company. It's only $5 a share. I mean, this is a great one to start with. Look at this. Look at this parabolic, we call this. Super high, super low. Oh my gosh, it dropped from 10 bucks all the way to $3. Lots of people were probably like, oh my gosh, I'm going to jump off the bridge over there. Like, I'm going to lose all my money. No, buy more. And look what happened. It popped back up again. You see my point, right? So if you're new and it's only $5.73 a share, right? This is one like, okay, worst case scenario, let's sell a $5.50 put. Let's actually do this in my account, and let's use this as an example here. I could do a different strike, but I'm going to go right underneath where it's trading. So it's trading at $5.70 per share. I'm going to do a $5.50 put. I'm going to sell it for $30. First, let's calculate the rate of return, right? So let's see. I want to see everything at one time. I'm going to make $30 in premium, and I'm going to put $550 up. Worst case scenario, I'm going to buy 100 shares at $5.50. If that stock goes bankrupt, I lose $550. In the grand scheme of things, it's a very small risk. I mean, you got to decide for yourself, but it's pretty small. What's my rate of return? Bro, it's 5%. I'm making 5% on my money for 1 week. Let's do that. Let's sell one BBAI 550 put expiring November 14th. I'm making $30. Confirm and send and send. And then you see the ding. You should see the ding in a moment. Let's see. Do I? Sorry about that. Oh, now it filled. Are you guys excited? Oh my gosh, I am so, first of all, I feel honored that you guys are here listening to me help you. So first of all, thank you for that. And secondly, oh my gosh, I feel like I'm over the moon. All right, let's walk through a few more questions. I was planning on going 30 minutes, but I'm going an hour and I'm okay with that because I want you guys to learn. Give me some good questions, Nina.
Okay, I'm just still going in order.
Do you trade that? I'm gonna reach some out. Do you trade the same few stocks? Yes. So I stick with the same tickers, and I don't really care what the price is. I just keep trading them over and over again. What's that?
We answered this question.
Oh, okay. All right. Yes.
Polly says, so I got signed on Friday, and then the stock was over the cost basis when the market opened today. Do I sell the stock?
Okay, so Paulie got assigned what did you get assigned, Paulie? What was the ticker? Let's walk through that. We're all waiting on you, Paulie. Come on, no pressure. Let me just answer it anyway. Okay, let's say you get assigned on something. Now we're gonna see as we go. Assigned means.
You said TSLL, I think.
Okay, TSLL. So that's like the Tesla leverage thing. Okay, $20 a share. Where did you get assigned, Paulie? You want to tell us where you got assigned, or I could just give an example. Type a little faster. No pressure. 2050.
$20.50 this morning.
Okay, so let me go through an example. Let's say I sold a TSLL put last week, and it was a $22 put, right? Just as an example. That means I was committing to buy 100 shares if it drops below $22. Now this morning, per Polly, it was like $20, $20.50. I bought 100 shares at $22. Now, that means that's my cost basis, right? Now, that is going to adjust by the premium that you took in when you originally sold that put. This might be a session, like a lesson for another session, because it's a little bit confusing. But so if you don't understand this, it's okay. Just don't feel bad, and you will get it the next time I explain it. What that means is this. Let's say Paulie sold a $22 put, and he got paid $100 for it. If he has to buy the stock because it goes down, he owns the stock for his strike price, $22, but it will get adjusted by the premium that he got paid for that put. So if he got paid $100 for that put, it will his cost basis will go from $22 to $21. So he can actually sell a $21 call. Now, if and when you get assigned and you have to buy the shares, I suggest right away on Monday you sell a call against that. What that means, like in this example, let's say if you own the stock for, your basis is $21, you're going to click on here and you're going to sell a $21 call. You're going to take in more premium. Like for example, this last traded at $60. That money goes in your pocket right then and there, and you're committing to sell your shares if it goes higher than that strike price, which is higher than what you paid for the shares, right? If it doesn't go higher, you keep your shares, but you keep the money either way. So yes, Paulie, in answer to your question, you want to sell a covered call right on Monday after you buy the shares. Good question. I don't know how we're going to sort through some of these questions, because I have a lot of questions and I don't want to ignore anybody. So I'm going to have to figure out some sort of way for the next time to sort through some of these.
Selling a covered call is better than buying a long call.
What about?
I pinned this question.
All right, let's see.
So it's right at the top. If you just want to click it, it will extend it.
All right, let's see.
It's from Junior.
Is selling covered call better than buying a long call? Also, what about quick snipes, where I buy a contract, it runs up quickly and I sell it before I have to exercise? Okay, let me answer that. First of all, as we're talking on this program, in this live stream, we are never buying options. So let me just take a moment and clarify that. When we trade options, we can either buy a put or buy a call, or we can sell a put or sell a call. What we are doing, what I talk about when we create income for ourselves, we are only selling options. Some people buy options, and the point of that is, okay, I think Tesla is going to go up, but I don't want to buy 100 shares. I want to buy a call and pay $100 premium, and I think I can 10x my money, and I could turn that $100 into $500. That's gambling. We don't do that. What we want to do is we want to be the insurance company. We want to be the casino. We want to be the house. You walk into Caesar's Palace, right? And you sit down and play some blackjack. The odds are against you. Sit down and play some craps. Sit down and play whatever, certainly slot machines. Whatever you sit down and play, the odds are against you. The casino has the edge. That's what we are when we sell options. We are taking in everybody else's premium money, and then we're only buying their stock if it crashes. So we're never buying options. Good question. I'm going to have two more questions. I'm going to go an hour instead of a half an hour. I'm going to try to figure out how I'm going to do the questions moving forward a little bit more efficiently. But give me one more question, Nina.
Oh my gosh, how do I pick?
Just choose.
I've just been going in order with them. So
I'm going to pick a question. Let's see. There's lots. Somebody else asked about buying call options. Listen, I'm never buying call options. That's gambling, and we're not talking about any of that. We only sell options.
What about this one right here? Can you do option trading with REITs?
Can you do option trading with REITs? So a REIT is a real estate investment trust. You can trade an option. Whatever ticker you put in here, I don't know, I'm just going to put in whatever. If you see an option chain for it, you can trade options on it. So I would say whatever you might be interested in, put it in a watch list in your platform. And then if you see options on there, you can trade options on there. That would be the answer. I'm gonna answer a couple. Let's see. Okay, Michelle, the cash flow queen. I love that. I'm gonna answer this question. Let's say I was assigned 500 from ABC over the weekend. The stock jumps above my cost per share on Monday. Would you sell a call in the money for more premium? William, that's a really good question. And I always appreciate your comments, by the way, on YouTube. Thank you for that. So William, what he's asking, okay, let's say I got assigned 500 shares of ABC stock at $100. But over the weekend and Monday, I wake up Monday morning and that stock is trading at 110. You can do one of a couple of things. You can sell a $100 call, which is like in the money, we say, and you're going to get paid more premium. Or you can sell a $110 call, like higher than where it's trading or right where it's trading now. The way I usually do it, there's no right or wrong, so you have to find your groove. The way I usually do it is I would trade right over where it's trading now. So in other words, if I bought 500 shares at 100, but I woke up and Monday morning it's trading at 110, I would sell a $110 call. Oh, that's the 4 o'clock. Did you guys hear that ding, ding, ding? That's the market closing. So hopefully that answers your question, William. Listen, I want to wrap this up, but I want to say, before you guys hop off, I want to say a couple of important things. Number one, feel free to email me some questions. I'm going to go through, I think YouTube saves these, the chats, the Q&A, and I'm going to figure out how I can maybe respond to the questions that I didn't respond to. And then for the next session, I'm also going to figure out like what's a more efficient way to like maybe stream through the questions. If you guys have a question that's super important, email that to me ahead of time. I 100%.
Someone has a really important question.
Yeah? Okay.
You just confused me when you said, I'm just going to pin it right now.
Okay.
You just confused me when you said you're not selling options. I thought calls and puts were options. Can you clear that up for me, please?
Well, we are. Okay. So that's a good question. We are selling options. So let me clarify. When we trade, I'll use that word. When we trade options, I can buy options or I can sell options. When we create income for ourselves on a regular basis every week, we are selling options. So what we went through in this session is, as an example, selling a put. I sell a put, and as you go, you want to make sure a lot of times people like say the words wrong. They say buy instead of sell, or they say things wrong. You want to kind of catch yourself and you want to use the right terminology, because otherwise you'll confuse yourself. We are selling options. We're committing to buy shares of a stock that we like if it goes lower than a certain price, and we're paid income to do that. We are selling. We're never buying. The only time we buy options is if we're buying our contract back. If we already sold, so for example, let's go back to my IBIT contract. I already sold this, and if I want to buy it back, then we're buying it. But for the most part, we're only selling contracts. I would encourage you guys, I'm going to put something somewhere on YouTube. I'm going to direct you to a couple of videos to kind of give you the basics of, okay, here's buying, here's selling, here's puts, here's calls, because then it might be easier for you to follow. Yeah, good point. So I know we're a little bit past. I definitely want to take a moment before anybody drops off. I'm going to read all of these questions after this program, and I'm going to figure out the best way moving forward. I'm new at this live stream, so this is my first live stream. If this live stream kind of sucked, I apologize. I hope you guys got value from it. I know that there were a lot of questions, and I know also I went over a little bit on time, and I appreciate your attention, and I thank everybody for being here.
Michelle says life-changing for me.
Oh, that makes my heart happy, life-changing for me. So yeah, thank you. I'm going to put this edited video as well on my channel. Come back Wednesday. I'm going to have a couple of different things in place to make it a little bit better of an experience. But come back Wednesday, 3 o'clock, same time. And the advantage of this live stream, guys, is we're going to walk through these contracts that we're doing. So I'm going to show you in real time. Here's what happens if we buy it back. Here's what happens if it gets assigned. Here's what happens if it expires. I'm going to show all that to you. This is not hard. It's going to be hard at the beginning because it's new, but it will not be hard. Stick with it, and I promise this will change your life. I want to thank everybody for watching, and I'll see you soon.